One of the most important ideas in accounting happens to be on how are we supposed to account for the money that goes out of your company. So the money that goes out of your company can be towards various purposes, towards repayment of a liability, money that you borrowed sometime earlier. It can be towards meeting an expense, it can be towards purchasing an asset, it can be towards n number of such things. Our point of focus is what exactly would be the accounting treatment for any kind of expenditure, which implies, boss, I am paying money for some purpose other than repayment of a loan. Let us not bother about this repayment of loan. I am paying for some money for some purpose. I am incurring an expenditure. So this expenditure can be accounted as follows, depending on what exactly is the eventual outcome of those kind of expenditure. An expenditure can be accounted as follows. A, it can be capitalized, that is taken to balance sheet. B, it can be expensed off, taken to P&L account. So when I say that it is taken to balance sheet, I'll be showing this on the asset side as part of some asset. If I say it is getting expensed off, it goes to your profit and loss statement. That period it gets over. It doesn't get carried forward to the subsequent accounting period at all. Which brings us to the question, when should I capitalize and when should I expense off? So when capitalize? So we say that, boss, capitalize only if the outflow or the expenditure results in an asset. When expensed off? When the outflow or expenditure does not result in an asset or any enduring benefit. Now let us try and understand the whole concept using a small example. From there, let us just proceed further. Simple point. Let's say that we pay, say, rupees 500 to watch a movie. Some movie here. It can be any movie that stars your favorite actor or stars some actor you don't like at all. You pay 500 rupees to watch a movie. Let's say that this 500 rupees you spend on the ticket, which implies was 500 spent on a movie ticket. Right? We watch a movie. Movie is great. Everything fantastic. The first thought that comes to your mind is that the money was worth spending. Which implies whatever money that you paid, you got the money's worth. Which implies was money paid is equivalent to benefits received. We call this scenario as an expense. Let's say that spent on a movie ticket, same example, we watched a pathetic movie, atrocious movie. There are countless ones that comes your way, therefore no harm at all. You can think of 200 examples probably. But the point right now being, we watched a pathetic movie and boss, 3 hours later, you're just wondering why in the hell you spend those much amount of money in the first place. Suppose the money spent was a total waste, which implies money paid is equivalent to money lost. Here we call this kind of scenario as a loss. Is there an expenditure? Yes. Is the expenditure resulting in some kind of benefit to me? No. Loss. Is there an expenditure? Yes. Is there an expenditure resulting in benefit to me? Yes. Next comes the question, is the benefit enduring or the benefit is one time satisfied? Enduring benefit, potential future benefit, we'll call that as an asset. Enduring benefit, future benefit, we call that as an asset. One time benefit, benefit realized, we call that as an expense. No benefit lost. Let's take up the same example, spent on acquiring a DVD. Now, we watch the movie, good or average doesn't matter, but do remember that was money spent can result in more than one-time benefit, and more importantly, we can watch this movie multiple times, which implies was there is a future benefit from the money that I have spent. Benefit irike. So therefore, this would be a case where we can say that it was expenditure of 500 capitalized, take to balance sheet. Why? This is in the nature of asset. Second case, spent a movie, money's total loss, we'll say expenditure of 500. Expenditure is any outflow. Expenditure of rupees 500, we are just expensing it off, but the more appropriate time is a written off, which implies taken to P&L account. So this is a total loss. Total loss, reason no benefits derived. So the loss is the case of an expenditure where money is paid but you don't realize any benefit. So expenditure of 500 in the first case What does that behave here? Yes, it will be expense profit. Why? Once again taken to P&L account, but fundamental point being we have got the benefit for the expenditure income, the money that we have paid. This roughly summarizes the accounting treatment for various expenditure that you and I might end up spending.